Good morning. It's a payroll Friday, and you are watching 5 Before the Bell, the Street.com's daily market preview and market update right here from the heart of the financial district in central London. I'm Martin Bachardax, the London Bureau Chief here at the Street.com, and I'm going to take you through those 5 things you need to know before the bell. And of course, the first thing you need to know that this is indeed a payroll Friday. We are going to get the July employment report, but we'll talk about that in a bit more detail because let's first find out what's happening here in European shares. We're actually starting to edge a little bit higher. It was a bumpy start. Asia had a mixed session, and we were looking a little bit red at the beginning, but we've had solid quarterly earnings, and even though the euro is trading near that January 2015 high against the US dollar, investors are starting to claw back into European shares, and that's taking the bourses into positive territory for the session. Now, the FTSE 100 is getting some support from a weaker pound. It's always worth explaining that differential because FTSE 100 companies earn about 75% of their revenues from outside the United Kingdom. So as the pound declines, those revenues become more and more attractive. The pound had its biggest single-day loss since June yesterday. It fell to a 9-month low against the US dollar because the Bank of England, of course, kept its key interest rate on hold and trimmed growth forecasts for the next 2 years. So that really did snuff out all of the speculation that there was going to be a near-term rate rise from the Bank of England, pulled the pound back, and that's part of the reason we're seeing the FTSE up as we are at the moment. Royal Bank of Scotland, though, they did pretty well for their first half earnings. They swung into a profit. They are starting to see increased trading activity inside their investment banking divisions as well, but they are still locked in conversation with the Department of Justice with respect to potential fines and penalties linked to the mis-selling of mortgage-backed securities. There was no update on that, but it is hovering over the government lender, and even though the stock is doing well today, the company doesn't expect to actually have a full year profit as a result of some of these payouts and the ongoing restructuring since, of course, its spectacular collapse just after the crisis in 2008. Let's move on to U.S. news, in fact, and we got to look at VIACOM because they were trading significantly lower in after-hours markets last night, falling about 8%, and they may actually open at the lowest level in about 6 or 7 years today. It's an interesting story because the entertainment group, which owns Paramount Pictures, Comedy Central, Nickelodeon, MTV as well, actually had a pretty good fiscal third quarter. They saw their revenues rise about 8.3% to $3.6 billion, and they beat on the top line with $1.17 per share. However, on the conference call, executives were warning about a single-digit percentage drop in affiliate revenues in this quarter, which ends in September, and that was enough to concern investors significantly because affiliate revenues are about a third of overall revenues. And effectively, the decent numbers that we saw in the third quarter, the company said just aren't going to be repeated as a result of timing. And of course, the fact that more and more cable subscribers are moving online to fulfill their entertainment needs. And that is creating downward price pressure for the affiliate people who are actually paying the revenues to Viacom. Viacom's also, of course, in the middle of a spat with Charter Communications. Charter has allegedly bumped some of Viacom's channels, such as MTV and Nickelodeon, down to sub-tier packages, and that, of course, is reducing the impact of revenues coming forward into the subsequent quarters. They say that that's going to take a little bit of time to iron out, and I think that's part of the reason why the shares are a little bit lower as well. There's also some concern about a missed payment from an investor in China, which is helping to finance Paramount Pictures, which has been losing money as well and is part of the Viacom stable. So all of that collectively was enough really to have investors pull back, and they've pulled back sharply indeed. But you know as well as I do that the ground is shifting under the media landscape and indeed under the auto landscape, and anytime that you get bad news coupled with the fact that a company is perhaps poorly positioned to make that transition, well, you get what we see right now, which is Viacom down about 8% in after-hours trading, and as I mentioned, likely to open at around $32.30 a share, and that would be a 30% decline from the end of March. Now, a very big story today, and perhaps one of the headlines of the mainstream media, is going to be around Toyota and Mazda's decision to spend about $1.6 billion in the United States building a manufacturing facility that will ultimately produce around 330,000 cars a year and employ around 4,000 people. the two car makers announced the tie-up as well as some cross-ownership plans and an agreement to share technology related to smart cars, clean energy vehicles, and ultimately self-driving vehicles. This is a really, really, really big story. It's certainly going to be seized upon by the Trump administration because they have been pushing for foreign companies to build these things in the United States and hire American workers. And whatever you think about the president, he has had some success in that regard. Toyota and Mazda being the nearest example. Foxconn, the Taiwan semiconductor and iPhone assembler, is another. They, of course, are going to spend around $10 billion to hire 13,000 people in Wisconsin to build an LCD flat panel display facility. So the Trump administration has a right to boast about this, it has to be said. Toyota, well, it's trying to make the transition, as a lot of automakers are, to clean energy vehicles. They have, maybe even more so than Tesla, a really ambitious target of zero emissions cars by 2050. And they're actually going a long way towards achieving that goal by making tie-ups of this nature with Mazda. They also have similar associations with Subaru, and they've been reaching out to Japanese automakers for the last couple of years to try and advance this goal. So this is a really interesting story, and again, a really big one with respect to confidence in the U.S. market. Toyota, in fact, last month was the only automaker to increase sales in a declining market. Toyota sales increased 3.6% in July, largely off the back of some very popular and very fast-moving sales for the RAV4. Now, this new production facility, we don't know what state it's going to be in. Toyota, of course, has its biggest facility in Georgetown, Kentucky, but it will likely produce Toyota Corolla and the Mazda crossover SUV. So we're going to watch that story with interest. I would imagine you're going to see it everywhere because it's going to be headlined on most of the networks as a result of the job creation potential. But it has to be said, and regardless of what you think of the current administration, this is a win for President Donald Trump, and he's going to be right to tout it so. Now, it is jobs, jobs, jobs today. The July employment report will come in about 90 minutes' time. Economists are looking for the U.S. economy to have added about 183,000 new jobs last month, and for the headline unemployment rate to tick down to about 4.3%. The president has called himself and touted himself as potentially the greatest job creator in American history. And he's actually had a lot of his people out in the field of this week explaining and boasting about the job creation success that his administration has had. Now, so far, if you were to look at the February to June period after he was inaugurated in late January, you would see a net addition of about 883,000 new American jobs. And that's a very strong number indeed. Put into context, however, it's actually the slowest rate of growth in that period for 5 years. You got to go all the way back to 2012, where the creation rate was around 773,000 in order to get a slower figure. So the numbers have been solid, but they have been by no means spectacular. And part of the reason that they've troubled investors as well is because wage growth simply isn't coming alongside the job creation. We have to look deeply and very carefully at the wage data today inside the labor report to understand exactly how American workers are going to get paid, because it has twin dimensions. Firstly, of course, and most importantly, how Americans are going to be able to take that extra cash and spend it in the real economy, because about 2/3 of the U.S. economy, the biggest in the world, is driven by consumer spending. Secondly, and perhaps even more importantly, from a financial market perspective, inflation usually follows wage increases because, of course, the more money in the system, so goes the old economic mantra, there go rising prices. Now, if there is going to be some upward pressure on inflation, this could change the dynamic of the U.S. Federal Reserve and their plans for interest rate hikes. But at the moment, inflation is incredibly tepid, and the services portion of the U.S. economy has slowed to its slowest pace in 11 months. So if we don't get inflation and growth is going to flatline in the second half, the Fed will have to rethink, and therefore you are going to see corresponding tumbles in assets all around the world, most importantly the U.S. dollar. And the U.S. dollar, I remind you, is trading at a 15-month low against a basket of its global peers as we head into this jobs number. Come back to thestreet.com, of course, at 8:30 Eastern, straight away for the number and then all the analysis that follows. Now, let's take a look at Wall Street. It's going to be a busy day. The jobs number, of course, is going to be the focus of attention. Lots of shares to pay attention to alongside, though. Kraft Heinz is called up a little bit stronger today, about 1.2%. They beat earnings estimates for their fiscal second quarter last night, and they actually somehow managed to enact a significant amount of cost cuts against declining revenue in order to do so. The company is pretty ruthless in that respect, but it has to be said it's facing enormous challenges, as are most packaged and processed food companies in the United States and elsewhere. So it's nice to see the Warren Buffett control group provide a little bit of upside surprise. And as I say, the shares are called about 1.2% higher in pre-market. Snap is another one, a rare bit of good news for these guys. Business Insider is reporting that Google made an approach that could have been worth about 30 billion US dollars for the social media messaging group prior to its IPO. They described it as sort of an open secret that Google was interested in purchasing the group. Of course, it was turned down. The company decided to float on public markets instead. And whether or not this is enough to increase the share price today, and it is called 2% higher, it remains to be seen, but it does indicate that there is interest in this company and there is interest in the technology behind it, even if its business proposition at the moment doesn't appear to be so compelling. And of course, there are issues with respect to voting rights, with respect to the management team and where they're headed in monetization terms. But nonetheless, these kinds of stories do offer some solace to investors who are hanging on through the lockup period and hoping that this thing turns around in the same way that Facebook did, it must be said. Facebook shares, you'll remember, declined 49% after their IPO, before then only gaining about 336%. AMD shares, watch those too. They're called a little bit higher. The Abu Dhabi Sovereign Wealth Fund has enacted its second share sale in the group. It actually cut about 3.9% shares loose. That was 40 million shares worth in the second sale of the year. It's still the biggest owner, though, at about 13%. As we say, though, we are looking at a modest, maybe 50-point gain for the Dow Jones Industrial Average as we sit right now, and for the NASDAQ to pop about 7.5 points, or about 0.15%. The jobs number is going to tell us everything we need to know, though, prior to that, so these numbers have to be taken with a grain of salt. Good luck out there, guys, if you are trading this afternoon, and let's have fun watching that jobs report. I will see you guys next week. Have a great weekend. This is 5 Before the Bell. I'm Martin Bakkerdax. Take care.